market right now.
Well, leading indicators is one thing, but you're dealing primarily with lagging indicators, jobs report.
Yeah, no,
that's not bounced back.
Absolutely. Jordan, what happens to the dollar? I mean, over the next few quarters?
Well, let me just share this, that most people that follow the dollar get it wrong, and I think you have to look at the more of the psychology of it, and anytime you get a crowded trade, you have a bad trade right there. And so I think that the key is I don't focus so much on the dollar, but focus on opportunities in the marketplace. I'm not trading the dollar. What I am finding is tons and tons of undervalued companies because of the pessimism of America and that America's falling off a cliff. And I think that it's so far from the case right now that we're all focused on the lagging indicators, as Nicole pointed out, the jobs. But you're seeing growth all around the world. So I'm not playing the dollar trade. I'm actually buying undervalued equities and focusing right there.
Even if you're not playing the dollar trade per se, Jordan, good to see you. It's Anna here in London. Are you buying companies that have non-dollar earnings? Because that might be a way of taking advantage of the growth outside of the US, and also taking advantage of that, turning that weak dollar into something that you can gain from, I suppose.
Right, and that's a great point, and what happens here is, everyone's always confused whether they want a strong dollar or not. Everyone complains when the dollar's too strong, it's hard to export. Clearly, we all know at this point, S&P 500 is getting half of their revenues and earnings outside the country, and again, we continue to see a global market expanding. All the focus, as we know, is in China and Asia, but it's happening on every corner in the globe, and so I think that you have to really look at companies with franchises that sell outside the world. And remember, it was only a decade ago we were talking about how much people wanted American products. They wanted anything that had icons of America, and I think that America's strength is going to come back. We certainly export a whole lot more than what the media likes to talk about.
Hey Jordan, this is Christina. What the media they are talking about is that the market seems to be pricing too much of quantitative easing. Do you think there's a risk of overshooting here?
Well, I think it's, when you look at how low yields are right now, and I think that people are always talking about the fact that, where can you actually get return? I think that the Fed has said very clearly they will do everything in their power. They do not want a recession. They do not want deflation. So, they'll continue to feed this fire, and I think that whether they overshoot or not, I think that people who are going into long-term bonds because they're afraid of losing money in equities at this stage are obviously going to miss the boat. I think the things are already, market is firming, and I think what's really interesting is that people will look back 5 years from now and say, why couldn't they just have the confidence, the trust in the market that there's a business cycle, regardless of how much you try to eliminate a business cycle, you go from enthusiasm to depression, and we all know the way to make money is to buy any area in the market, any asset people are most afraid of. What they're most afraid of right now is equities. What they want to be most in is in fixed income at zero returns. And we know how that story will play out, I think, 2 and 3 years from now.
Hey Jordan, on Friday I was in Mexico, and I've seen a trend over the last year and a half. Companies kind of moving away from India, putting a lot of operations actually down in South America, Mexico. What's your take on the currencies there?
Well, again, I think we're going to see money will move wherever it's maybe cheapest to manufacture. I think that what I'd like to see is, in fact, domestically some corporate tax restructuring where we bring jobs back here to America. But, whether it was China and then it goes to Vietnam, then it goes to wherever it goes to low-cost production. But all of a sudden, I think when you look at where manufacturing takes place, where it will take place, it will be all around the globe. We're seeing, I think, the #1 market right now is South Africa for the year. We're going to see development on all continents. I think when this country and people were afraid that demand destruction was disappearing, you saw China actually making huge investments for minerals on every continent. And I think we have to recognize this is a global economy that's growing. It's growing in every area. And I think the recession is going to get smaller and smaller in the rearview mirror.
This is a global economy. This is a global show. We appreciate both of you being with us. I hope you guys can stick around. Jordan, thank you so much for your time this morning. And Gary also sticks around as well. We'll continue the conversation about currencies and, of course, the jobs report that Jordan was alluding to. But up next, restaurateurs all over the Big Apple are awaiting word today on whether they get a much-coveted Michelin star. We're dining at the table of the world-renowned chef Daniel Boulud. Coming up next, talking taste, sweets, and top cuisine with the head of the Michelin Guide. In 2005, Michelin began publishing a guide to New York restaurants. While its stars were coveted in Europe, New Yorkers were a little bit skeptical, but my, how times have changed. Today, Michelin releases its 2011 guide with its ratings bringing restaurants significant prestige and a whole lot of business. Celebrity chef Daniel Boulud with this flagship restaurant, Daniel, earned its 3rd star last year. He recently invited me to dine at his table and told me how Michelin's growing importance is just starting.
All my life I worked as a young chef in 3-star Michelin in France with the greatest chef of their time, and it was certainly my ambition to one day be one of them, and today I am one of them. I believe that he has done an amazing work for us chef because it gave us the benchmark, international benchmark, which no other guide had. And the international benchmark is that a 3-star in America is compatible to a 3-star in France or a 3-star in Japan or 3-star in Italy, which is really the best of the best. I opened a restaurant in Beijing 3 years ago, and it has been an amazing experience, but I wanted to expand a little bit more in Asia. In New York, I self-finance all my restaurant. It's different. If I want somebody to finance my restaurant, and I can be basically profitable and be paid from day one, I have to be out of town. So that's what happened because I'm in Palm Beach, I'm in Miami, and we're in Vancouver and London and Singapore very soon.
But there is a balance that you need to strike between expansion and oversaturation.
No, of course.
Where do you strike that balance?
Of course, as you grow more restaurants, now between all our restaurants we have almost 1,000 employees. So out of that you can pick and move. So you can keep picking and moving.
It's really the red pages, which call the red guide.
Yeah,
this is the reason why we keep only the good one. And for that, the inspectors have to eat in the good and the bad one to only return the best.
But Anna only eats at the good ones. I know Anna, she has a question for you, Jean-Luc from London. She only goes to the Michelin rated restaurant.
Bonjour to you, Jean-Luc. I wouldn't be quite so sure about that, Nicole, but thank you for bringing me in. I just wanted to pick up on the fact that you don't just give stars, you do take them away as well, Jean-Luc, and I understand that there was quite a controversy in London when Gordon Ramsay lost one of his.
Well, it's always, very good to give stars. It's a beautiful call. Actually, I'm going to leave the studio and start giving calls in New York about all the chefs because we revealed the selection today. And it's a beautiful moment. Last year I called Daniel Boulud. I wake him up at 8:30 in the morning and he'd say it's the most beautiful day of my life. So obviously we give pleasure and it looks like Santa Claus, but sometimes you have really to take them away. And it's not because, the stars are really not engraved in marble. They really could actually broke as a crystal stars, because they will be, as soon as we're going to reveal the selection here today in New York, the inspectors will have a night off tonight because we know the chef is going to party all night, but then obviously the next day they're going to be back on the road and work on the selection for next year. And if you don't find the quality, it's our duty to tell our readers, sorry, this year we have to take the stars away because it's not the same value as it used to be last year.
Oh no, you're going to be the Grinch.
Yes,
a lot of tears
absolutely
in this city. Jean-Luc, I wish we could spend the entire time talking with you. Any breaking news of who's getting a star, who's losing a star?
We'll let you know in a very short time, but let me tell you, I'm going to give calls this morning. It's always a pleasure to wake up the chef in the morning. I know they all have the sale ready, checking if the network is working or not, because even in New York, and I'm sure you read the New York Times article this morning, saying that even after 6 years, we'll really become a New Yorker guide. So I'm very happy about that, and today is going to be the 6th edition.
Congratulations.
And it's the best investment. You spend $18, $19 and you're definitely not going to have a bad meal anymore.
Congratulations, Frenchman, one of the most important New Yorkers today, no doubt.
Thank you.
Thank you, Nicole. Thank you for your time. Enchanté. We'll continue the conversation with Gary coming up. We have a few more minutes to discuss ADP report, what's likely to move markets. No doubt we'll be well fed, so we'll discuss that at the break. Jobs, that's what we're talking about. He says no jobs, of course. We have a minute left on the show. Jordan Kimmel, what's your pulse check on what we're likely to see from the jobs report? The ADP report today.
You know, the jobs report might come out and surprise us to the upside, but the key is don't get distracted by the day-to-day. I think if you look out, the Fed is telegraphing they do everything they could do to help this economy and market, buy undervalued, intrinsically cheap stocks, and really think 16 and 20 months out.
What do you think?
Well, that's right. And don't forget, too, that American companies today have more cash than they've ever had. $3 trillion of cash, 15% of their net worth, the highest ever. And that cash will be deployed at some point.
Yeah, it has to be repatriated, some may say, as well.
Right.
But that's a good idea to keep in mind. Gary Burnison, I wish we could continue this conversation. We're out of time. Jordan Kimmel, thank you so much for being with us. I really appreciate both of you guys.
Nicole.
Bright and early this morning. That's going to do it for the program, though. I'm Nicole Lapton in the United States.
I'm Anna Edwards in Europe.
And here in Asia, I'm Christine Tan. Thank you very much for your company here on Worldwide Exchange.